Welcome to Akka Bits and Bytes. Today we will discuss about the hospital index. Firstly, I wish to share my disclaimer with you that this video has been prepared only for my own educational purposes and it should in no way be construed as a recommendation of any sort. And if anybody makes any investment decision based on this video, will be purely his own decision. It is recommended that one should do his own research or consult an expert in the subject to guide further. Well, so coming to the subject, I observed sudden interest in the hospital sector where smart money seemed moving in Indian healthcare. Remember, while the BSc Healthcare Index covers complete value chain of healthcare sector like diagnostics, drugs, etc., and is heavily weighted down by a highly volatile export-reliant pharma companies, the pure play BSc Hospital Index is rapidly gaining massive in dominance as a niche hospital sector. Driven by domestic consumption, this focused corporate hospital sector is projected to clock growth of 18 to 20% CAGR through 2029, easily outstripping the generic 10% growth rate of the traditional healthcare basket. Well, the obvious question is, which companies are driving this multi-billion-dollar charge? A prompt exhibited top 10 market leaders by market capitalization dominating the hospital index. Apollo Hospital leading the pack with an exceptional 5-year profit return CAGR of 78% as India's largest clinical network. Next, Max Healthcare pacing right behind with a 45% CAGR anchored in premium metro configuration. Fortis Hospital clocking a solid 31% CAGR via strategic pan-India diagnostic expansion. Next comes Narayana Rudralaya, yielding a highly efficient 29% CAGR through low-cost, high-volume cardiac model. KIMS is the next in the order, generating a stellar 26% CAGR by capturing Tier 2 and Tier 3 hubs. Aster DM Healthcare at 20% CAGR following key structural value unlocks. Medanta Global Health compounding at 35% CAGR as a regional super specialty powerhouse. Rainbow Children's registering a steady 24% CAGR in niche pediatric and maternal care. Jupiter Lifeline pacing forward with an estimated 23% CAGR across Western corridors. HCG rounding out the top 10 with a 15% CAGR focused on specialized oncology treatment. Let us discuss about the structural drivers and blind spots. The core structural drivers powering these astronomical growth rates are clear. We are seeing major institutional private equity buying out standalone regional clinics, creating highly efficient corporate hospital chain, combining that with expanded domestic medical insurance penetration and a booming international medical tourism market. And the investment case looks very, very solid. But keep an eye on the financial blind spots. Many of these top stocks traded at premium of maybe the PE multiples of like 50x and 100x. Any delay in adding new hospital beds or friction over insurance reimbursement payouts could trigger near-term margin squeeze. When you look at this sector, it is important to understand ARPOB, which is average revenue per occupied bed. To pick the winners, institutional investors ignore basic occupancy rates and focus heavily on ARPOB, or average revenue per occupied bed. ARPOB measures exactly how much revenue a hospital extracts from an occupied bed every single day. By prioritizing high-margin, complex robotic surgeries and reducing a patient's average length of stay, top corporate hospitals can exponentially grow their net profit without spending massive capital or building new real estate. So, with India's bed-to-population ratio sitting far below the global benchmark, this infrastructure build-out may become a multi-decade mega trend to my mind. If picking individual stocks feels too risky at these rich valuations, one may play this entire thing passively through targeted ETFs, and one name that cropped up as part of that prompt was Grow BSc Hospital ETF, not again a recommendation, or even look at specialized healthcare index mutual funds to instantly own a slice of India's medical infrastructure boom. I have seriously decided to track the hospital index, understand the operating matrices, and invest with a long-term horizon view. Thank you very much.